The globalists have been perfecting their plans over the years. Create a crisis in a country, weaken them from the inside out. Eventually, they will have to sell off their assets to make up for the shortfall. Then, central bankers and the supranational elite will be able to buy them up for pennies on the dollar. Rinse, repeat. You came here for the truth, so let me unveil that for you. Today we're going to look at what's going on in Turkey. We're going to look at the emerging markets. I've been covering this quite often recently. It really is so important to understand right now. I'm going to get into it as quick as I possibly can. Let's begin by taking a look at this. Exposure to Turkey, the bank's channel. Consolidated statistics. Domestic banks' claims on Turkey, ultimate risk basis. Looking at this out of the first quarter of 2018, on the left-hand side, you can see that Spain is by far the most at risk for what happens in Turkey. Now, a lot of people suggest to me, and from what I've seen in the general consensus, it's that when you have a problem in Turkey, it is contained to Turkey or geographically the country surrounding it, and nothing could be further from the truth. You have to understand that these banks are all interconnected with one another. So imagine the amount of money that is surrounding these Turkish companies that Spain has been buying into. You have to look at it for what it is. Now, you can see right here as a percentage of the respective country's GDP, 5%. But that's a significant amount. 5% of the GDP is exposed directly to Turkey. If this country collapses, you're going to have an unraveling of all of the financial instruments in Spain. And then, if Spain goes down, then you have problems in France, you have problems in Italy, and so on. And this spirals down. Each country is interconnected with another, whether you see them or not. It needs to be addressed. People are not recognizing the problems that we have today. This is very important, and I'm consistently seeing people saying, who cares? Let them fail. Or, I don't really care what happens in Turkey. Won't affect me. You don't realize how interconnected the companies are. You have to start digging. Pick up your shovels. Start digging. You're never going to be able to learn what's really going on if you sit back and relax. Private sector foreign debt. Now you can see here on this chart, I've shown you similar ones before. Private sector external debt as a percentage of the GDP. Right here near the top of the list, Turkey is significantly higher than many other countries. Hey, it's even higher than Greece in this regard. So we've got an issue going on here, and I think that people need to be looking into how much exposure to the weakness each country has. Look at the ripple effect and understand how this is going to affect not just Turkey, but the other countries as well. I mean, look at their currency. It has declined 37% in 2018. It had reversed some of those losses, but it's not done yet, I assure you. We're being told that the problems are fixed, but again, this is going to just continue to get worse. The Argentine Peso is also doing terribly. I mean, it has been flirting with that 30 to the US dollar mark. I obviously think that it's just going to continue to get worse as well. You can see South Africa, Brazil, and Russia all down approximately 15% for the year. Okay, a lot of currencies are looking very weak. Now, all of the rating agencies downgraded Turkey as expected, and you can see that their bond yields have accelerated quite a bit over the years, but especially throughout 2018. This is going to be a problem for them. They need more and more people coming in buying up their debt, and obviously this is becoming a problem. Even those countries that are giving negative returns are selling off because they want that security and stability. Nobody will want to keep their money in Turkey, although we know what happened with Argentina. They released the 100-year bond and it was bought up beyond what they were actually initially going to go for. But you saw recently, I showed you here on the channel, how nobody wants them anymore, and they're starting to do terribly. So maybe initially you might be okay, but ultimately you get what you pay for, and the returns are going to be dismal on those. Central banks are tightening again at a very fast pace to respond to the emerging market currency weakness. This is the number of global central bank rate hikes, 6-month trailing sum. You could see that in 2018 they are doing so at a rate they have not done since just after the financial crisis and just before as well. This is going to be something that we see as a trend continuing. Central banks need to increase their amount of tightening through interest rates, also through the amount of money that they've been printing and been reducing. So the liquidity is drying up. I always love to cover that issue because it is so important. The average of global stocks is currently down 14% from its January 2018 high. Remember that. When people tell me that stocks are rising, I ask you, what stock market? You're not looking at it on a whole. This is globally, including the US, which has done very well when you look at a few stocks. If you look at the FANG stocks, if you look at the NASDAQ, you're going to see one picture that you can tell me the stock market is going up. I've heard that many, many times. But look at the world stocks, down 14% from their 2018 high. That's significant. If I look at bank stocks, I am noticing the fact that they are in a bear market. If I look at emerging market stocks, they are doing terribly. If I look at China's stock market, it is down in a bear market as well, more than 20% the last time I checked. These are significant amounts. Now, it doesn't mean that it can't turn itself around and suddenly go up, but what are they doing? We're going into a tightening cycle. They've got some very, very, very big issues to deal with. Tightening cycle, stocks are coming down. How are they ever going to be able to push them back up without starting to engage in new quantitative easing programs? That's the message for today. If you found the video informative, please give me a thumbs up. Remember the ripple effect that is my message for the day. If you want the financial education that was not taught to you in schools, these 2 books have it all. You're going to be able to get everything you need to know. No jargon in these books, just the straight to the point facts. All right? Just like my videos, I don't engage in any of that garbage, wasting a page. I read books, I get 1 or 2 points out of the book. I read 300-400 pages and I get 1 or 2 good points. That's not where this book is. Every single line, I scrapped easily a quarter of the book because it was too wordy, too many words. I really just broke it down, made it simple. Hope you enjoy it. Take a look at the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.